Season has fared so far. Speaking of numbers, let's focus in on Ashok Leyland's quarterly show, and it was a loss that they reported this quarter of about 147 crore rupees. There has been weakness in their CV segment. Let's connect with the CFO of Ashok Leyland, Gopal Mahadevan, to talk a little bit more about their quarterly earnings. Thank you so much, Mr. Mahadevan, for taking time out. What exactly is it that you've been picking up from the lead indicators in terms of the CV cycle? Do you think the momentum can sustain, and which segments of the economy do you believe have shown an improvement?
Yeah, first of all, wish you and all your viewers in advance and a very happy Diwali. We are seeing momentum picking up from Q1 onwards. So if you were to look at Q2 numbers, the total industry volume has actually grown 4.5 times from Q1. Why do we see Q1 instead of last year? Because Q1 was almost a virtual shutdown. First time in the history of the world that you see no revenues, all industries completely shut down. So it's important for us to measure the rate of recovery that's happening. So we've seen total industry volumes actually going up by 4.5 times, and our own Ashok Leyland volumes have actually grown 8.5 times. So that's why you've seen quite a spurt in our market share, which has moved from about 14.5 to about 28.5%. As we move forward, most of the industry reports state that the year would end with a possible degrowth of approximately 30%. Now, the bad news stops there. The reason is, as on date, on H1, the total industry volume is lower by nearly 75%. So if by the end of the year, it is expected that the industry would only be at 30% lower than last year, it would mean that Q3 and Q4 should be growth quarters, and which is what we are internally readying ourselves for. And for us, we are optimistic that we can ride on this growth because we have launched products both in Q1 and Q2. We launched the Avatar range of fully modular vehicles, trucks in...
So if you're saying that the industry volumes could contract by 25 to 28% in FY21, then that means that the second half of the year volumes will significantly be higher. How are you readying yourself for this, and what has been the volume trend for the second half in terms of a lot of the supply issues? Have they been ironed out?
You are absolutely right. We are working very closely on the supply chain with our suppliers. We are also working on a manufacturing strategy. Hosur is already up and running reasonably well. In fact, the LCV production is almost above 90% levels. I think as Q3 and Q4 come in, we would see the production levels in the other plants, especially Ennore as well as Pantnagar, also going up. So you're right, we are readying our supply chain for that. Unless there are any localized problems that can come in because of COVID, because the COVID is still popping up here and there, but we're also seeing that the level of cures is exceedingly high. So unless something like that happens, we are readying ourselves for growth in Q3 and Q4.
What about margins? We've been seeing a consistent decline now for about a year. So what is the kind of new normal that you're looking at when it comes to that margin number? And also, when can we see operating leverage kick in on the back of resets that you've undertaken on certain projects, as well as other initiatives as well that have been undertaken?
I think I will possibly rephrase your question, because the point is, yes, there has been a decline, but the decline has not been because of the company. The decline has been because we've seen a continuous decline in total industry volume. So when your industry falls off, like last year was nearly 40%, right? So, and then this year we've actually seen that in H1 it's almost 76%. So when that kind of a phenomenon happens, one cannot expect margins to improve at such low level of revenues. That we have posted a 2.8% EBITDA in Q2 at such low levels of volumes actually means the company is very resilient. And I missed to add one more important fact. In Q2, we generated 1,200 crores of cash. My net debt in the company has come off from around 4,200 crores in Q1 to around 3,000 crores in Q2, and our debt equity is at approximately 0.45. We are very comfortably placed. Project Reset, as you rightly said, is a bottom line augmentation program. It is not just cost. So
Okay, let's talk about the acyclical businesses as well. In Q1, non-vehicle sales contributed to a little more than 59% of revenues versus a normal contribution which was at about 15 odd percent. What was the mix like then in the following quarter in Q2, and are you planning to scale the non-truck business further, defense, exports?
See, I would put it this way. Our Q2 non-MHCV domestic volumes were roughly about 55%. I think the number was slightly higher in Q1. Last year, the same number was, I think, MHCV was at about 40%, if my memory serves me right. As we move forward, what we would want to do is the following. We would want to grow our MHCV business and grow it profitably and continue to improve our share of business in the domestic MHCV business. There is no doubt about that at all. But even as we're pursuing this, there is a separate trajectory for having growth paths for each of the other acyclical businesses. So what we are doing differently over the last couple of years is to look at each of the portfolio of these acyclical businesses completely differently and having a separate plan for, say, power solutions, having completely different set of trajectories for the LCV business, similarly for defense, and similarly for aftermarket. So what we are looking at is driving up the volumes and revenues of these businesses, possibly even faster because the base is still low.
Also wanted to understand, with the government's push now for the defense sector, what really are the prospects there, and how exactly is it going to contribute to your revenues going forward?
Well, at the moment, I would just tell you that the order for some of the defense products have been much higher than what it was last year. We are expecting to finish defense revenues much higher than what we clocked last year. I think there are two parts to this. One is the importance of defense sector now, the growing importance of the defense sector for the country, and in terms of in terms of covering our borders itself. And the second one is also the impetus that the government is trying to give for the sector. So Ashok Leyland as a supplier to to the defense forces will certainly stand to benefit from the renewed vigor that the sector is getting. And it also has been partnering the defense sector through thick and thin. So we believe that as we move forward, some of the tenders that we've already won would also get placed and get converted into orders. And if that happens, our defense revenue should grow. But at the moment, since these tenders are confidential, I'm not able to share it with them. But we are getting the feeling that the government should start to place orders on some of the tenders which have also been rolled out in the past.
Sure. Also wanted to understand if the scrappage policy would incrementally move the CV recovery cycle.
Any kind of a scrappage policy will be a positive for the industry. Because what is happening is currently as we speak, we have got state-of-the-art BS6 vehicles. And we've got a whole bunch of other vehicles which are from BS0 to BS1, 2, 3, 4, and then BS6. We cannot have a situation where we have all these vehicles running together into the future. At some point in time, the earlier vehicles will need to be phased out. When that happens, you're going to see the replacement demand kicking, as it is happening in automotive, as it's happening in other vehicular industries. So as the emission norms keep changing and the vehicles become technologically superior, today's trucks are much superior than what they were maybe even 5 years ago. So when that happens, and when customers, the end users, the industries like steel, cement, FMCG demand the latest generation trucks, because a lot of their supply chain is going to depend on the turnaround time of these trucks. And
Okay, we'll let you go on that note. Thanks so much for taking time out, Mr. Mahadevan, giving us a view on how things are shaping up for the company, the industry volumes, as well as your individual businesses and the core business. That's the word coming in from Ashok Leyland.